comfort zone, fundamental analysis, and deeply rooted in finding tech investments. And I'm excited to welcome a fellow tech investor, fundamental analyst, Sam Badawi. Sam, solid 57. Good to have you on the show, my friend.
Thanks a lot, Lou. Nice to meet you. Nice to be on the show.
Yeah, we've been on separate spaces together, kind of exchanging different ideas back and forth. I want to congratulate you, though, because if I remember correctly, last week on X, you got to celebrate the wins. And somebody, I think, bought a new Tesla because he's been winning so much. Am I accurate
here? Yeah, you're very accurate in that one. I mean,
good for you.
It's a lot of hard work, perseverance, but you know what? I've been looking forward to getting that car my whole life.
Yeah, man, that's awesome. You got to do it. And I'm glad you had the wins to give you the comfort to go, hey, I'm making it happen today.
Yeah.
So let's talk. Like, we came across each other on a space because we looked at things very similarly. What are you looking at? Like right now, my biggest, and I'll confess this to everyone, I think they know it now over the last couple of weeks, my biggest positions are in the AI energy related space. So all the Bitcoin miners that have pivoted to HPC. So IREN, CIFR, have some CleanSpark. What do you think of those names? I know that I've seen you tweeting recently on IREN. So what's your whole fundamental analysis of that situation?
Yeah, so a lot of this really stems from basically the compute bottleneck that AI, as far as a build out, has been happening for a long time. I mean, first we started out with ChatGPT coming out, and the focus was really honed in on training models and training compute. But lately, what we've been seeing the last year and a half is that, okay, so you can train your models, but there's going to be a lot of people that are going to be hitting these models left and right, whether it comes from enterprise or small businesses or even consumer, even with OpenAI and Gemini. So as that starts to scale up, it's not so much the focus on building out the best possible GPUs for the training models, but it's about building the infrastructure to be able to manage all these inference queries that are really going to be growing at a high CAGR for the next few years or even the next few decades.
Yeah.
And the thing is that
drive that home. I mean, what's the biggest stat that jumps out to you, right? Because like you talk about it, the first phase is training the models. Then you let them loose to go ingest new data and make decisions. That's going to be exponentially more compute that ends up happening. But like, how do you put that in context for people when you try and explain?
So let's just say that at first, Jensen Huang always said, CEO of NVIDIA, always said that there was a $1 trillion opportunity, $1 to $2 trillion opportunity when it comes by 2030 for AI. And now that figure, I think it was about $5 trillion as of his last podcast that he had in the BG2 podcast with Brad Gerstner. And when you think about that at scale, in just a matter of a year and a half, that number has ballooned about 150% on top of the existing 2 trillion.
Yeah, that's a good point.
What people need to really understand, and I think there's a lot of misconception when it comes to the actual build out of AI, but also the amount of inference that's going to be utilizing these models as the models itself do scale out. You already saw that AWS, Google Cloud platform, as well as Azure, we're basically growing anywhere from 20 to 30 to even 40% for Azure.
Yep.
But as this continues to be built out to meet that demand, these hyperscalers can't keep up with the demand by building out their data center and infrastructure as they do on their own. They need to turn to smaller players to be able to help them do this. And not just smaller players that can build 1 or 2 data centers, but smaller players that can own the entire stack and build it at scale while being able to produce the outcomes that they have for the AI workloads that they're getting on their own. So if we take, for example, the recent deal that Microsoft had with Nebius, which was really one of the stocks that I found to be a really good buying point, especially when it was in its 20s, like just a few months ago. I think a lot of the misconception with that was that, okay, they're a Russian company because they used to be known as Yandex, but then they sold their Russian assets to be listed on the NASDAQ, and now they're headquartered in the Netherlands. And they have customers all over the world, with most of the infrastructure centering around the US, and that's where most of their customers are. But this entire team, not only is it a diversified business across 5 different companies, but their core business, they have a lot of experience from building data centers, from acquiring the land, to building all the buildings themselves, to getting all the servers, to have the entire stack from bottom up and top down, to be able to build a software on top of that entire layer, and then rent out this compute to companies that do actually need it. So much that Microsoft signed a $17.4 billion with them to build out multiple data centers in capacity for them for the next few years.
Yeah, and I think you put your finger on it earlier in your explanation, that I think people need to understand. that there was a false assumption that the Microsofts and the Googles and the Amazons of the world could just keep building out their data centers in perpetuity, that, hey, let's just keep doing it. They needed to go even faster. And the only way to go faster and bigger was to go find other players that could do it with them, that already had put the infrastructure in, had the experience, and they basically had the guaranteed power that they could essentially, for lack of a better term, flip the switch and accelerate that growth much faster. Would you agree with that?
Yeah, exactly. And you even saw the news previously with Google signing contracts with TeraWulf, which is essentially another Bitcoin miner that has turned into advanced computing. And then you saw just last week that they signed up with CIFR Mining as well to do the same deal, and that one caught a bid. So the reason why IREN pretty much excites me in this way is because, one, it was trading at a pretty attractive valuation just a couple months ago.
What was your entry, if you don't mind sharing? Where'd you get
I got it at $21, and I thought I was late. Apparently,
dude,
I wasn't.
I was like 20, some 19s, and I was like, this could go back to 10, and I'm not going to be surprised.
You know what? I was ready for it to go back to $10, and I was secretly hoping that it would. And I'm not going to lie, I'm still secretly kind of hoping it will.
No,
as well,
don't say that. We had Mike Alfred on, who's on the board, and he's saying 100, 200, 300 is in the realm of possibility.
That would be very nice. And they never had a major deal signed up with them yet. So the market's still waiting to hear that, you already had Applied Digital and Core Scientific, which were both also Bitcoin miners, signed big deals with major contractors. So it's only inevitable that IREN is going to get one themselves. And the reason why I like IREN as a play in this aspect is because IREN, they're a very big fan of using green energy, green renewable energy, because it helps them basically keep the cost down. And they're actually spec'd out to grow their data center capacity all the way from 2.9 gigawatts from what they are today at 880 megawatts. So that's a 250% increase. And to have that 1 year from now is pretty wild to think about. They're doing it for someone. They definitely are.
Well, no, right. They know that the business is going to be there. And that's the funny thing is you start layering on even the most conservative models. And here we're bringing up the chart for IREN that they could be doing literally hundreds of millions of dollars in annual recurring revenue based upon the power that they have guaranteed to bring online in the next year and a half, which I don't think people understand. So I think to your point, we had Mike Alfred, who was on the board on 2 weeks ago, and he was saying it was still early, like, don't even think about it, hold forever, there's a long way to go. So you and I were cautious at 19 and 20. Here we are at 45. People shouldn't be cautious, not saying, recklessly abandon all discipline and just put it all in here, but it's still an attractive entry if this is a stock that could go to 200, 300 from here. Would you agree?
Yeah. It really depends on your timeline, right? So if you're trying to catch the absolute bottom and you don't want your price to go lower for the next couple of weeks, it's kind of hard to say that, right? I would say that it would be a bit unrealistic to buy into the stock today and expect it not to go below $40 because we were literally around $40. We were below $40 just last Friday, and that was no news because of IREN. It was because you saw the dilution that happened with CIFR, and CIFR pulled back as well. And where are they today? They're back where they were at their highs.
Well, it's funny because, the CIFR, that convertible deal was actually a really good deal. They can avoid the dilution, that they actually put in a mechanism, which a lot of the companies don't do. So I thought that pullback was overdone. So I actually added on that as well. Are you adding to any other names in this space? Or do you look at some of the pure Bitcoin miners that are rumored to be getting into HPC, or are you kind of waiting for that to really step in?
You kind of hit the nail on it. Earlier, you mentioned CleanSpark, and that's something that I just got into today. And I'm kind of riding the momentum in this one. You saw a bit of a bounce with crypto and Bitcoin specifically off the sub 110K levels. Its 200-day moving average is actually around 104K, and Ethereum is actually around 3K. So those have bounced pretty considerably off those lows, but not exactly touching yet. And I do agree with Tammy, as she was just on here recently, is that we still do have a little bit of ways to go. And, even though they do get into advanced in hypercomputing, it doesn't mean that we're necessarily out of the woods, because a lot of that price that they have today, as far as Bitcoin goes, does kind of direct exactly the direction that these companies do go in on the short term, because they do have a large reliance of their business on mining crypto. And that means selling the Bitcoin that they do mine to be able to sustain their operating.
Yeah, but don't you think and I heard Mike Alfred talking about this on a space over the weekend, where having the ability to keep some of that Bitcoin mining as they scale into HPC is actually a benefit, because let's say there's a slowdown in demand for HPC, or there's grid constraints, that they can actually reallocate resources to generate revenue from the Bitcoin mining. So it's almost an anti-fragile business approach once it gets to maturity, which I think is attractive if they can make that jump into HPC. And I think that's what you're saying with CleanSpark, is they got to prove that they're actually got a customer for compute, not just they hope to have one.
Yeah, if you look at the price action, and ultimately, the market's going to be the ultimate voting machine. The market's always going to be right at the end of the day. If you look at the price action with CIFR as well as IREN, they have somewhat detached from the price of Bitcoin volatility that we have seen recently. You saw basically Bitcoin trade sideways essentially for the last few months and actually pull back from its recent highs recently. And then you saw CIFR and IREN basically 2 or 3 times from there. So they are becoming a bit detached. CleanSpark, I feel like, is going to be that next company that actually does that. They did announce that they're going to get into advanced computing. And if they do that, they could possibly detach. And like you're saying, if they keep the Bitcoin in the balance sheet, it might reduce the volatility and reduce the correlation between Bitcoin as well as the underlying, which in this case would be CleanSpark.
All right, so we both love IREN. We've both been getting into CleanSpark. That's one that's got some really big asymmetric return potential. Let's pivot a little bit here before we let you go and we wrap up the show. We were talking before you came on about cybersecurity, and I agree with you. This is an area of the market that few investors understand how criminally underinvested we've been in cybersecurity, and therefore it's a tremendous opportunity, especially as we have so much more data coming online. But you tell me what your fundamental thesis is on cybersecurity, and is there a name that you particularly like in the space?
Yeah, so I've been a really big fan of cybersecurity for a while, and I've owned several cybersecurity stocks. But one of my holdings that I've had for quite some time is CrowdStrike, and that is mostly planting itself at the endpoint security client management. So you're talking about your laptops, your phones, and so on, the actual endpoint devices that the users are actually on. And then you have Palo Alto, which is basically the cybersecurity giant that's out there today that has its hands across all areas, but specializes mostly on network security. So basically making sure that no threats are sitting around the network itself that will eventually expose itself to the vulnerabilities within the applications and within the endpoint devices themselves. And then finally, this is the one that a lot of people don't really understand, is Rubrik. Rubrik focuses more on data resilience and data security. And what does that mean exactly? It means that if you have systems and applications that need to be backed up within your infrastructure and your enterprise environment, it needs to be recovered very, very quickly. And we're not talking about hours, we're not talking about days, we're talking about minutes and seconds. It needs to be recovered quickly because these are thousands of users that are hitting a lot of these applications, and every single minute that it's down could mean hundreds of thousands or even millions of dollars over the course of a couple of days. So that is the importance behind Rubrik. But most importantly, Rubrik doesn't really have any glaring competitors in its field. I wouldn't say they have no competitors, but they have a very wide moat when it comes to its field because they are growing at around 50% on a subscription ARR basis. Last time they had their earnings, the stock got sold off. Why did it get sold off? Well, it's likely because the entire sector was running into those earnings, but maybe it just needed to have a little bit of a pullback just to reload again for another leg higher. Today, Rubrik is actually probably the most popular companies out there when it comes to data resilience and data backup, that I think Wall Street is starting to recognize that. A lot of the analysts are actually projecting their price targets north of $100, and right now it's trading around 83.
Yeah, no, listen, and for people that don't know, it's RBRK is the ticker. It's still trading at like a $16 billion market cap, which is not that big when you talk about the opportunity in cyber. I've always traditionally played cyber through the ETFs just because I thought it was hard to pick there's no silver bullet solution. But it sounds like you've got all the bases covered when you go from CrowdStrike on the endpoint to Palo Alto in the middle, and then data resiliency with Rubrik. So I appreciate it, man. I appreciate your insights. I encourage everyone to follow you on X because you give out nonstop intelligence and information on the names that you're followed and invested in. So I appreciate what you do, man, and look forward to having you back on the show again sometime soon.
Thanks a lot, Lou. Appreciate it.
All right, man. Talk soon, Sam. Well, folks,